Hello, trader friends. Are you one of those investors looking to get some passive income? Everybody's talking about passive income. So, in this video, I'm going to blow your mind and I'm going to show you how to use your brain, how to use your trading platform to create a synthetic rental property that you can earn passive income using your brain, using options, using trading to replicate a rental property. Now, let's get to it. Let's pretend you're looking for a rental property. Now, what do you need to buy a rental property? Number one, you need a lot of money. Number two, if you don't have enough money, you need a loan. Right now, with the interest rate so high, I think it's going to be very hard to find a rental property that can pay for the elevated mortgage with these elevated rates. Also, when you buy a rental property, you're going to have to deal with property taxes, some HOA or maintenance fees. You're going to have to deal with insurance. You're going to have to deal with unclogging toilets, unclogging something breaks, etc. So, rental properties are great. I own a couple of rental properties. I love my rental properties, but they do present a few headaches. Now, on the positive side, if you buy a rental property, what are the positives? So there's two huge positives that rental properties give you that replicating it synthetically with options will not give you. Number one, normally a rental property is an asset that goes up with time. Of course, normally in the US, where I live in California, properties tend to go up between 3 and 5 or 6% every year, which is very nice. Number two, also there's a tax advantage because the portion of the property that is considered a building, not the land, can be depreciated in 27 and a half years. So it's a tax advantage and it's a wealth creator. So those two things we will not get with options. What we will get is we will replicate the rental income without all the headaches, without all the hassle that a rental property creates, and also being able to invest a very small amount of money to replicate that income. So that's what's really exciting about this strategy. I hope I have your attention now, and now I'm going to show you how to do it. You see, I like using the S&P 500, the ETF SPY, but remember, with SPY, we have four flavors, four sizes, being SPX is the biggest one, then we have ES, then we have SPY, which is 1/10 of SPX, ES is 50% of SPX, and then we have MES, which is even a smaller product. So this strategy can be replicated with Big Daddy, Mr. SPX, Medium Daddy /ES, then SPY, and then MES. What I use for my children's accounts, and my children, they're young adults, they're recently graduated from school. They do not have a lot of money. They're saving up to buy their first rental property, but they still are interested in generating soft passive income while they achieve these goals. And this is the strategy I taught them, and they use it every single month to replicate that rental income. Let's go to the beautiful, tasty trade platform where I'm going to demonstrate how to achieve this using options, using a very simple strategy, and actually using a small amount of money. Here we go. What I like to do is we click SPY here to make sure we're trading SPY. Then I like to go and do this trade 1 year out. 1 year out, we're in January 2024. So 1 year out would be January 2025. And we open the trade chain. And the first thing I like to do is I like to look at three different levels. The first level that I like to look at is the expected move, which on the Tasty Trade platform, we can see this brownish color. And the expected move to the downside is 415. The expected move to the upside is 530. So that's the range with the current implied volatility that the S&P is expected to trade at. Then the first dotted line is the one standard deviation, which is around 67% probability of expiring outside the money. And the second dotted line, which is here at the around 297 level, that would be the two standard deviations. That means there's 94% chance that the S&P does not get there, or a 3% or 4% chance that the S&P gets there in a year's time. So these are the levels that concern us. And what I like to do is a good rental property yields between 5 and 6%. Right? If you're lucky, if you're doing Airbnb, etc., and you have a beautiful property, maybe you can get 7, 8, 9% in your Airbnb. But Airbnb is not really passive. Airbnb, trust me, we own an Airbnb, and it's a lot of work. It's a hospitality business. It's not really a rental business. And so, if we know that 5%, 5 or 6% on our money is a good percentage, I want to be a little bit greedier, since we're not going to enjoy the capital appreciation of our asset. If we own a rental property, that price would probably go up. So I'd like to be a little more greedy than 5 or 6%. Actually, normally I like between 9 and 12% return. 12% would be amazing, because 12% means 1% a month. And Uncle Tony, his brain is very simple, and I like simple numbers. 12% return, 1% a month. That's an amazing property. So let's start looking for a put that we can sell that can generate that percentage from us. And so the first thing I want to do is I always look for a put that's worth $9 or $10. Why $9 or $10? And you're going to see right now, because normally the collateral or the capital that the broker is going to ask us to buy this rental property is, for a naked put, is around $9,000 at the money. And let me structure it now, and you're going to see something that you have to pay a lot of attention. Please pay a lot of attention on the capital requirements of the put. So the first thing we do, I look at the expected move. 415 looks juicy to me. So we see that we get a 9.80 credit. What does 9.80? That means we're going to collect $980 that are going to be deposited. It's like getting paid rent in advance. This $980 is going to be deposited into your brokerage account. And the second thing that I like to look at, and please take a look at the Tasty Trade platform. I'm going to delete myself, because on the last video, a lot of you guys said that you don't want to watch my beautiful face. And I agree with you. And most of you will agree that, beauty is not one of my key features. So the other thing that I like to look at is the probability of profit. So the probability of profit of this trade is 83%, which is click. I love it. The second one is, in Tasty Trade, we take profits at 50% of the credit received. So that means the chance that we collect half of that premium is 93%. I love that too. And we are collecting $3 of daily theta, which means we're actually collecting $3 of rental income every day. Yes, sir. $3 every day. That's not bad. And here's where things are a little bit negative. Negative because we have to invest money in order to get some income, right? If you want to get a rental income from an apartment or a condo or a house, you have to buy that house. So the brokerage house, in order for us to do this trade, is requiring $4,000. And if you're good at math, and you start looking at the numbers, say, hey, we're going to collect 980, and the house is only asking for 4179. So let's do the math with my little calculator. So 980 divided by 4179. That means the return is 23%. So it's actually 2% a month, right? If we keep this trade on and nothing bad happens, we're going to collect 2% a month on our money. Why did I say that I'm only collecting 1%? You see, I'm more conservative, and I like to look at things that can go wrong, not when things go right. When things go right, everybody's a genius. You buy something, goes up, you make money. You sell a put, the underlying goes up, you make money. So I want to show you what happens if we start moving that put up in price. Let's say we move it up to the 450 strike, and look what happens. The brokerage account is not asking for $4,000 anymore. Now it's asking for $7,100. Now, let's say we go to the 470 strike. Guess what? The brokerage house is not asking for 4,000 or 7,000. Now they're asking for $9,000. And that is why when I do a trade, and hey, let's do one more. Let's go deep in the money. And once again, the brokerage house is asking around $9,000 collateral for this trade. So what I want you to understand, even though when we place the trade, the brokerage house is only asking for $4,000 of collateral, that I want you to understand that this trade can blow up in if the market goes down hard, VIX explodes up, that they might ask you for $9,000 or even maybe more for collateral. So if we're collecting $980 credit for our trade, that's why I like to always plan $9,000 of capital. So that's another concept I want you to understand. I call it planned capital. What is planned capital? Planned capital, if you saw my video of my yearly trading plan, planned capital is the capital that you need to have ready in your trading account in case the S hits the fan. And I hope the YouTube algorithm doesn't hate me saying the word shit. But if the S hits the fan, you need to have the capital there, or, a very mean person called Mr. Margin Call is going to come calling, and you might get a margin call. So that's why I want you guys to plan on $9,000 instead of the $4,000 required to place this trade. Now, how are we going to manage this beautiful trade? If we follow tasty trade commandments, we're going to take off this trade at 50%. And I know you're smart guys thinking, hey, Tony, if I take it off at 50%, then I'm not collecting the full $980. I'm only going to collect maybe $500. And you're right. And $500 is not 1% a month. And you're right again. But the magic is, so we're going to close it down and reestablish it again and again and again. Because why do I like taking profits at 50%? Because I like to reduce risk. And by taking profits at 50%, we reduce our vega risk, our gamma risk, and all sorts of risk that we have on our trades. Now, let's see, when do I expect to collect 50% of our money? So let's say we go to the month of June. June is 6 months away. And let's take a look at the 415 put. The 415 put, guess what? It's only worth $6.65. So that's even a little bit more than 50%. So just by doing this simple exercise of finding our strike price and going 6 months in time, we can see that our put is going to, if nothing bad happens, of course, nothing bad happens, our put is not going to be worth 980. It's going to be probably worth 360, and we can close it down and reestablish again. And what do I call that? I call it rinse and repeat. And I like to take risk off and redeploy at a better price level. Now let's take a look at the different collateral that the computer is going to ask us if we want to place this trade at a year out. Once again, let's go to the 1 year out, and let's open SPX, which is the big daddy, which is Uncle Tony's favorite trading product. Why do I like SPX? Because it's simple, it's big, I only have to do it once. So let's go to the 4150, which again, here is the expected move. If I want to do it on SPX, the initial capital required is $41,000. Yeah, I know. But then we're going to be collecting $9,000. So that's a big apartment building. And if we move this trade to at the money, the computer is going to ask us now for $95,000. And if we move this trade in the money, the computer is going to ask us for $95,000. So once again, I wanted to show you how much capital the computer is going to ask you, or the trading platform is going to ask you at different price levels. So if you're a big baller and you have a lot of cash, and you can do it on SPX and instead of SPY. Then if you're a medium player, which is, there's nothing wrong with being medium player, or you're more conservative, well, you can use ES. Let's go 1 year out on ES. And let's go to, so ES, they haven't opened, oh my goodness, on ES, it only goes to September 2024, which is 247 days out. And if we go to the 4150 strike, so here we're going to be collecting $61, which is $3,000 credit on our rental income that we're going to collect for the 9 months. And it's only asking for $5,000 of collateral. And here, please pay very, very detailed attention on the capital required. So futures don't explode in requirements as much as SPY and SPX. And let me show you. So if we go to at the money with the futures, instead of asking us for $5,000, it's now asking us for $10,000. And if we go deep in the money to the 5,300, it's gonna ask us for $13,000. So the amount, the capital required is still a lot more, but it doesn't go up as much as it does on SPY and SPX. And finally, if you are a smaller player and you're not confident still to do this every month, a year out, let's grab MES. MES, unfortunately, it only goes out to July. And once again, let's go to the 4150, which is at 1 standard deviation. And here we're going to collect $200. Capital required is going to be $456, which looks like almost a 50% return, right, on 6 months. It looks very, very juicy. But once again, let's be more conservative. Let's sell our MES at the money, and then the capital required, instead of being $400, is now $1,000. And if we go a little bit deep in the money, instead of $400 and then $1,000 at the money, now it's $1,200. So as you can see, the initial capital requirement can be a little tricky, a little, the computer will increase it as the market starts going down. And most of the time the market goes up, right? So this trade, of course, doesn't like it when the market goes down. How does Uncle Tony play it? So once again, if you have $9,000 to sell one put, hey, you can replicate a rental property that's worth $9,000. Now tell me this: where can you find a rental property that you can buy for $9,000 and then you can get 1% return a year? Benefit number 2, the 415 put, I'm looking at my little notes, is 60 points below the current market. 60 points below 475. Guess what? It's a little bit more than 12% down. Benefit number 2, if the stock market goes down 12%, yes, 12% is a big number. Of course, 12% we can be down in 1 second, but 12% down is a huge number on SPY. And the market can still go down 12%, and we're still going to collect our beautiful premium. Another benefit of this trade versus a rental property. That means if you're afraid and you don't like it, you can shut it down. Try to sell your apartment in a down market. Liquidity is not ready available to you. So if you don't like this rental property trade that we did, you can shut it down. And so you see, you have liquidity, and you have a beautiful big return. Now let's pretend worst case scenario happens. If you have the capital to hold it and the stock market goes down, hey, you can take delivery of SPY at 415 and sell a call against it. And we're going to do what I call a wheel trade, a wheel of fortune trade, which I'll probably explain in another video. And also, another thing you can do if the S hits the fan, if the stock market goes down to 415 and you don't want to take the loss and you don't want to take assignment on SPY, what I would do is do what I call a roll down and out. We're going to roll down and out our put to give us more time to keep the dream alive, to give us more time to be right, and also to put our put away from the risk. The tsunami is coming when the market goes down. The 415 put is our lonely soldier at 415. The tsunami is coming and it wants to kill our naked put at 415. So what I like to do is I grab my 415, try to add more time to it, and then I'm going to sell it lower for a credit, which I will show you in a future video. I'm going to do a video just rolling down and out. But so those are the things you can do. If the S hits the fan and the tsunami is coming, you can do one of three things. Number one, take delivery of SPY, which is not bad because we want to buy assets and we want to buy assets cheap. Number two, you can roll your put down and out. And number three, if you're really scared, I would close this trade down at a 2x loss. What does it mean? If we collected $10 credit on our put, and now the put is worth $30, that means we collected 10, and now we have 30 here. That means we're losing $20 on it, which is $2,000. If you're really scared, I would take that thing off, and I would take the loss. Now, on the positive side, let's be positive. I'm a positive person. And how would I manage this trade on the positive? So once again, I mentioned we're going to take this trade off at a 50% return. If we sold it for $10, we're going to take it off at $5. And what would we do if we take it off at $5? What I would do, let's go back to the trading platform. Let's say we took our trade off at 50% off. We took our $500 profit if we did SPY. And then I would go one more year out. Let's say, let's pretend we're in June 2024 and we already collected 50%. Then I would go to June 2025 because June 2024 would be the time where we're taking profits on our rental property and redeploy this. And we're going to redeploy it again by selling a put again 1 year out. So once again, let's pretend we're in June 2024. I will be selling a June 2025 put for around $9 or $10. And once again, here we're collecting $1,000. Our initial planned capital, capital required is about $4,000. And if the S hits the fan, it can go up to $9,000 or $10,000. So that's how you do it. Now, if you have more money than the $9,000 to do a SPY, I'm going to encourage to do something that I do with my kids, which is called a rental property put campaign. I know it sounds fancy, but what does a campaign mean? Campaign means you do a trade systematically and periodically for every piece of time. What does it mean? So we're in January. We're in January 2024 right now. I would put the strategy on for January 2025. And if we go to February next month, I would do it again in February 2024. And then I would start having a trade on in January, then in February, then in March, then in April, then in May, then in June. And if we do that in June, of course, I want you to have, planned capital of at least, if we do it 6 times, at least $60,000 in your brain that it might be required for you to have this trade on. And by June, what will happen? What do you think will happen? In June, we're going to start taking profits of the trade we did in January. So if we close the January trade and we're in June, so we have 6 simultaneous trades on at the same time. And in June 2024, what we will do is now close the January one and establish a June 2025 put to reestablish again 6 simultaneous trades. And that way, we're probably going to have always between, if the market rallies very hard, you're probably going to have 2, 3, or 4 puts on at the same time. And if the market goes down hard, maybe you're going to have 5, 6, or 7 puts on at the same time if you're doing campaign style, doing it every month. And as a bonus tip, I do not like to sell on strength. Uncle Tony, you're never going to see Uncle Tony selling a put if the market is rallying. I do not like to sell puts on rallies. What I like to sell every month, it doesn't matter if it's the most bullish month of the year or of your lifetime, there's going to be 1 or 2 or 3 down days during that month. So I encourage you to use that opportunity when the market goes down and the VIX explodes a little bit, to use that volatility expansion to place your trade. So let's recap. Number 1, we're going to do a synthetic rental property. What does a synthetic mean? Synthetic is a fancy name that options traders use to replicate a a long asset or a long or short product using puts and calls. So when you hear a trader say, I'm putting a long synthetic, that sounds very fancy, but they're actually what they're doing is buying, replicating the long underlying. So number one, we're replicating a rental property. Number two, we can buy this rental property with little money. We start with $4,000, but we plan $9,000 or $10,000 in case the shit hits the fan. Number three, we can do it in many flavors. We can do SPX, ES, SPY, or MES. Number four, we should take profits at 50%. Number five, we do a campaign style. If you have more money, you can do this campaign style, which means you place trades every single month and start taking profits at 50%. And remember, this does not replicate a rental property 100% because you were going to lose out on the appreciation of the asset. And number two, you're going to lose out on the depreciation that you can write off of your taxes. But as additional benefits, to summarize, you can have instant liquidity. You can use very small amount of money to replicate this trade. You can generate beautiful income every single month, replicate a rental property, and it's also a way to buy assets cheaper. I always tell my kids, you have to convert your earned income into passive income. Or convert your earned income into assets. The SPY is an asset, right? A rental property is an asset. So if you want to be rich in life, you have to keep buying assets because they're printing so much money every single day. There's so much money getting printed that we have to protect ourselves by taking 15 to 25% of our earned income and putting it into assets. I don't care what assets you put it. You can put it in treasury bills, corporate bonds, you can put it in stocks, you can put it in rental property, you can put it in digital assets like Bitcoin and Ethereum, you can put it in art and collectibles. I mean, there's a lot of asset classes that you can invest in, but I encourage you to keep constantly buying assets. And so this is a way to actually force you to buy the asset at a lower price, right? Because every time say, oh, the market goes down, I'm gonna buy the asset. Then the market goes down and you do not buy the asset because you're scared. This kind of forces you to buy the asset at a lower price. So there you have it. If you want to replicate a synthetic rental property, follow Uncle Tony. If you want to profit while using your brain to trade and invest, follow Uncle Tony. And remember, you gotta risk it to get the biscuit, baby.